Well, good morning, everyone. This is Cousin Marv Eisen from Timeless Dollar, and we're at another beautiful day. It's September 17th, a Tuesday. The market just opened. It's 9:32. We're 2 minutes into the trading day. Right here, you'll see these horizontal lines. There's 1 point between each horizontal line. And as you know, for E-mini trading, it's $50 per point. So if you guess right, you make $50 per point. You guess wrong, you lose $50 per point. Not terrible, but E-minis is the way I trade, and I choose E-minis over stocks for so many reasons. If you take my course, I'll go into it, but basically, E-minis can't be manipulated. E-mini trades, there's virtually no slippage. It's the largest trading vehicle in the world, and the commissions on trades are far lower than stocks. It's like $1.50 per side per contract. So there's a heck of a lot more reasons to trade E-minis over stocks. And I won't even get into the tax advantages. Yes, there are tax advantages in trading E-minis. Now, trading E-minis, if you've taken a trading course, or trading in general, if you've taken a trading course, much of that is going to apply to stocks, but it doesn't apply to futures, or as well, really. Futures can move very quickly in a short time. With stocks, in order to make any kind of profit in stocks, you have to find the stock. You have to scan the universe of 25,000 stocks or securities. Find one that's moving for whatever reason. And in many cases, it's a penny stock that's being manipulated by the pump and dump crowd. So you have this scanning software. Great, you have scanning software. You zero in on a few stocks that are moving. Maybe take a position in one or two. But then again, you have to buy thousands of shares or hundreds of shares to get any kind of real action. And it's a lot of work just to get into the market. And then if you have multiple stocks, you have to have different screens. You've seen pictures of these trading desks where the trader has a screen with 12 different sections on it, each partition rather having a different security that they're trading or that they're studying. How can you keep track of all that? It's impossible. Trading E-minis requires only one vehicle. The S&P E-minis. You see this? This is S&P E-minis future December 2009. And that is the symbol ESZ 2019 or ESZ 19, depending upon who your broker is. Let me go into what I consider a difference between trading stocks and trading futures. With trading stocks, you set your trading point. Let me just I'll open up my trading screen. You place the limit order, you set the limit, either an absolute price or the number of ticks above or below. If you're buying, you're going to set it below. The quantity and the stop loss. The stop loss is where you're going to give up the ghost and swallow your pride and take your loss. Now, that might work for stocks, but here's the thing. If you're going to lose, call it $200, that's 4 points on a single contract. Here, this chart, we have 1 point between each horizontal line. See, $29.99, $3,000. If you're going to set a stop that will result in a maximum loss of $200, that's 4 of these horizontal lines. That's not the way I teach trading. That's not the way I trade. And here's why. I go into the market with an expectation that the market is going to move in a certain direction. The market moves up, the market moves down, so you're right or wrong. You're 100% right or you're 100% wrong, okay? If I take a position in trading, I take that position based on an inclination that the market is going to move in a certain direction for a relative period of time that's going to net me a decent profit for my risk. Now, what do I mean? What do I mean by inclination? Well, an inclination is a feeling that the market is going to go in a certain direction, and I'm going to take a position to ride with that direction. How do I get that inclination? Well, I do it by being a fortune teller, reading the future. And it might sound silly, but it's not. You see these things here? Well, these are called candlesticks. And candlesticks are a visual representation of what traders are doing. So I read these candlesticks pretty much like a fortune teller reads tea leaves. When I execute a trade, with the sentiment that traders feel the market is going to move in a certain direction. Now, if it moves in that direction, right, I make money, right? And if it moves in that direction in a momentum move, which is really what I'm looking for, it moves in that direction consistently for a few minutes. But what you want is a move in a positive direction, positive in terms of what the direction you traded. What you want is to hop on the trade early on, recognize the sentiment of the market and adopt that sentiment and go with it, and then hop off when that momentum, when the movement, the price movement, sort of dries up. Now let's say that I'm wrong. Let's say I hop on a trade and it moves against me. It moves the other way. Well, if I were a stock trader, I would have that stop loss set down several points below where I entered the market, and I'd wait and wait and wait and hope that it would reverse before it hit my stop. And if it didn't, I'd lose my $200. I don't do that. Remember, I go into a trade with a directional bias. Let's call it a directional bias. And if my bias is wrong and the market moves against me, I don't want to wait till I lose $200. I want to get out right away because I went in with a bias thinking that the market was going to move a certain way. And if I'm wrong from the get-go and I'm out. There's always another bus. Remember that. Remember that. There's always another bus. You can always wait. Hop on, get out of your trade. If you lose a half a point, let's say 2 ticks, or even a point, $50, no big deal. Okay? But you don't want to sit there and wait, hoping that it reverses, because if you're in that situation, your bias was wrong, and the market told you that it was wrong, and you just waited around and took a greater loss. Why do that? You want to trade the market when the market goes in your direction. So now we're in a 3-minute candle. The market is starting to reverse a little. If it pulls back to like midpoint of this candle, I'd say that we'd collapse back down here. But if this reversal, momentary reversal, stays toward the top of this candle, it means that the bears didn't have the strength to knock the bulls down from where they brought it up. Notice also, in particular, that we are about 2 minutes into this candle, and the high of this candle, remember the high of this candle did not reach the high of the previous candle. That doesn't portend good things for the bulls. And sure enough, there we go. There we go. So that's what I mean in terms of reading the market, reading the tea leaves, getting a sentiment or a directional bias, and trading that bias. But do not wait until the market, if the market reverses and goes against you, just get out. When in doubt, get out. That's one of my rules. I have a bunch of rules. They're in my course. They protect you if you are trading and the market moves against you. There's a whole bunch of rules on how, when, where to trade, at what point, time of day. I can't go into it right now. But basically, if you are a trader and you're looking for a vehicle to trade and you're not happy with stocks, or the stocks haven't done it for you, come over to the futures side. You might find that you have better fortune with futures than you do with stocks, and you don't have to wait a whole bunch of time to make money in futures. Typically, what I like to do is I wait until there's a good entry, or better yet, I wait until what I consider is a great entry. A great entry would be where the market is bottoming out and the stochastics are oversold, and we have a sharp V bottom and the market reverses. I'll recognize that, particularly if we're at a point of support, and I'll jump on there because the odds are that I'm going to be right at that point. When does that happen? See, what I tell you, this never reached the high of the previous candle. Look what the bulls are doing. The bulls are taking a licking. Bears are in control right now. Sure, if you jumped on over here and you jumped off over here, you made 3-4 points. Nice, okay. Would have made $200 on one contract. If you traded 4 contracts, you would have made $800, and I think you could have gone away for the day or the week, even the week. But your trading style is up to you, and it's a matter of what you're willing to risk and your tolerance, the fear-greed sensation. You know, a lot of guys that get on the computer and they can't wait to trade. It's like going to a roulette table. You can't wait to place your bet. Don't do that with trading. Don't do that. Wait till you have bias that is strengthened by your experience with reading the market, reading candlesticks, looking at action. You see, the length of the candles is important also. Sometimes I trade once a week, twice a week, because that's when I find the ideal, what I consider an ideal entry point. And I'll go in with 4 contracts, 5 contracts. You know why? Because if I go in with 4 contracts and the market goes up in my direction 1 point, that's $200. $200 with 1 point. And if I'm right and I jump in at a momentum point or a point where the trend is, there's going to be a trend move, I can make $1,000 very easily and very quickly. And so can you. But you need to learn how to trade futures. It's not like stocks. If you're a stock trader and you've been looking for, and you haven't been really happy trading stocks, or you've been flim-flammed by the pump and dump guys, come over to the E-mini side. You can make good money in E-minis. You learn to trade. Patience is a watchword with trading. Patience is one. Just sit there, watch the screen, watch the price action, because that tells you what everyone else is doing. And that's really what you want to know. You want to know what everyone else is doing and get a handle on what you think they're going to do in the next few minutes. And that's all it takes to trade. Don't take my word for it. Come on, try it out. You can do this with paper trading, but learn how to trade. Don't just jump in. Learn how to trade. Take my course, Trading Mastery for Financial Freedom at Timeless Dollar. You can make a lot of money, and you can learn a skill that will keep you in the black for life. But you can do very well trading futures. Okay, this is Cousin Mar Rising. Thanks for watching, and I'll see you in my next video, or better yet, I'll see you in my course, Trading Mastery for Financial Freedom. Have a good one.